Hey guys, Stock Saturday, and it's a bit of a red week for me, a couple of percent, so I seem to be underperforming the market a little. This seems to be partly down to Stellantis. Not sort of quite sure what's happened there. I haven't seen any sort of particularly bad news. I don't think it's the ex-dividend date. Pretty sure that was the 24th. So yeah, we'll have to see if it goes down on Monday or whether that was just sort of false news. It did go down by about as much as the dividend, so yeah, a little bit unsure on that, but we'll see. And also the miners. So Chile have come out and said that they're looking to nationalise lithium mines, and there's sort of a suspicion that this is going to start extending to copper mines, and other countries are sort of potentially following suit. Mexico have been sort of looking to do similar with many sort of different mines, silver mines and copper, I believe. So yeah, this is sort of, I think, potentially still bullish for the prices. Could be sort of, various people looking to lock down and secure materials, so it could sort of spur on demand. But yeah, if you've got mines in those particular areas, then obviously it's potentially bad news. But yeah, certainly Vale and Rio Tinto, people like that, have seen a bit of a drop. You've also got sort of China, potentially sort of weak demand for iron ore in particular, so that sort of dropped slightly, not very much, and copper's sort of been hit slightly as well, but I think the stocks are maybe dropping in advance of what people think is going to be a drop in the metals. But speaking of miners, I thought I would highlight one of my more recent buys and something that I'm sort of looking to top up. Still sort of thinking that I will continue almost dollar cost averaging. I don't really do that all that often, but sort of inching my way into Fortuna Silver Mines and CleanSpark on the Bitcoin side from my bond position. So started a position in Fortuna last week, and yeah, it's seems a sort of reasonably undervalued silver miner and gold miner. I would say they're actually more gold than silver now, despite the name. But yeah, $1.08 billion market cap now, and come to their reports. They sort of give a breakdown of their various mines, which is very nice. So 118,000 ounces of gold out of the Argentina mine, and that's at $1,221 all-in sustaining cost for the gold. So sort of getting on for, although gold's had a little bit of a drop, but sort of $750 to $800 profit per ounce on that, which is very nice. And if we're expecting gold to do reasonably well going forward, then that could increase. And then you've got the Mexico, as I say, Mexico mine, potentially a bit of issues going there going forward. But yeah, 5.7 million ounces of silver for the year at $15.50. So that's pretty good. So $10 profit on there. Above the all-in sustaining cost. There are sort of admin and overhead costs potentially to go on top of the all-in sustaining cost, so it's not necessarily absolute net profit, but I tend to use all-in sustaining cost rather than sort of the net profit, because you can get sort of various write-downs and sort of non-cash costs and that sort of thing go into that. So this is just a bit more of a sort of smoothed out profit, basically. And then so they have one or two less profitable mines. They've got a Peru mine where they do 1.1 million ounces of silver, and then some base metals. Nice to sort of have a little bit of diversification, although this isn't very much, a little bit of zinc and a little bit of lead. But the equivalent, so they convert this into equivalent silver price, and all-in sustaining cost of $20.30, so a bit less profit on that mine, but it's obviously a smaller mine, 1.1 million compared to 5.7 million, and that's the South America, or Latin America, including Mexico. And then they have West Africa, which is sort of growing. They have a new project that is on for first gold pour in mid-2023, and this is going to increase their gold quite significantly. And they also have the Burkina Faso mine, 106,000 ounces of gold, but that's at just over $1,800 gold. So that would really want sort of a much higher gold price to be sort of really significantly profitable. But as is sort of the way with miners, you know, a sort of $500 increase in gold, say, would be a 25% increase, but this might be a sort of 4x in profit on this particular mine, the Burkina Faso mine. So the miners, I always say, are a leveraged bet on the gold and silver price, and that's what I like. So we've sort of totaled up all of these mines at a sort of $2,000, maybe sort of $2,200 potential gold price for the next year, and a sort of $26 silver, which is near enough where we are, and putting a sort of 15p multiple on, which I think if silver and gold start rising in price, people might be willing to pay sort of closer to 10-15 PE rather than, you know, 5 at some, which some of them are at the moment, or sort of 10 on the more established miners. Then if we get to 15, then I think you could be looking at sort of $3 or $4 billion market cap for this. So yeah, potential sort of 3 or 4x maybe in a couple of years. So I quite like this as a sort of alternative to my Bitcoin miners and that sort of thing, as a, you know, a potential 3 or 4x. Don't really see that in too many stocks. Oh, and just coming down to Fortuna's annual guidance. So this is quite handy that they sort of break everything down. They show a little bit of the lead and zinc. So 45 million pounds of zinc. It's not really a sort of a huge, add to the business, but I think the zinc and lead could potentially sort of add 300 or 400 million to the market cap, which is pretty good. But yeah, so 282 to 320,000 ounces of gold, quite a wide range. So depends on how well the mining goes, and 6.3 to 6.9 million ounces of silver. And more importantly, the new mine that is now coming online is even on the high end, $1,080 all-in sustaining cost. So that's incredibly good. That's sort of, and on the low end, 880 is sort of down there with the really sort of profitable people like Barrick. I never sort of think quite as much to Barrick. I sort of think because they're a very low cost, they do end up at a sort of quite a high PE ratio compared to people like these. But yeah, to sort of have them coming on with an extremely profitable mine, you know, even on the high end, you could be looking at nearly $1,000 per ounce in profit. That's pretty good from them sort of generally being quite a high cost miner. So you get that sort of extreme leverage on the metal price as things rise, which I do think we could be in for a bit of a rise. A lot of people are saying this sort of, very, very long-term cup and handle formation, which people sort of seem to think is pretty bullish. I tend to sort of go on more fundamental reasons rather than technical analysis, but people do say long-term technical analysis is more accurate than short-term, and this is, you know, a 10-year plus time frame, and it has been resting for quite a while. So I think if we get more sort of inflation and money printing and whatnot, then this could do well. I think if you go into, I've sort of shown this before, if you go into pounds, then I believe we are already well through the previous highs. So that's pretty nice, even though it has come down ever so slightly recently. And silver's still got a ways to go to catch up. It's nowhere near the sort of highs of nearly $50. We're at sort of half that still. And even in pounds, you know, it's done reasonably well, sort of up to £20, where it was, you know, only at 27 in the sort of 2010, 2011 bull market highs. So yeah, we've still got another potential 50% rise just to get to those highs, compared to gold, which is already well through the highs. So I do like having a reasonable amount of silver in there and not just the gold. So that is one of my bullish bets at the moment. Fortuna Silver Mines, not 100% safe, as you would sort of like, but that's what you get with potential, you know, big risers. There always going to be something wrong with them. Balance sheet sort of looks okay, could be better. Debt sort of 240 million in debt and 80 million in cash. So yeah, there's a little bit of debt there, but nothing sort of too much. So interest of 14 million, nothing really to get too bothered about. It's sort of not taking up a huge amount of profits. So yeah, I think they could do well. So just having a quick look at the news. There's a reasonable amount of news come out this week. We've had sort of jobs data come out. Bit strange, the sort of employment change. There was a load of new jobs added, but unemployment also rose. So yeah, a little bit of change in there. That was February number, so not the most recent, but 0.1% increase in unemployment. And then sort of housing data for US, a little bit worse than expected. Nothing sort of too much getting worse just yet. Car registrations are always sort of way off on the monthly at least, but year on year up 18%, so that's pretty good on last March. But the CPI data came out and it was pretty terrible. So I always say the one to be looking at would be core CPI month on month, which was 0.9%. Last month, 1.2%. So it's a little bit down on that, but was forecast to be 0.6. So yeah, sort of compound that up, and it's still over 10%. Everyone focuses on the sort of standard CPI year on year, which I think is a bit of a lagging one, but that's gone back up to double figures. I think you can get, you know, a very high year on year figure, but sort of low monthlies. And if you sort of take, you know, the last 2 or 3 months and annualize that, and it's at a low number, then that would be sort of positive and potentially sort of ahead of what everyone is looking at. But we don't have that. We have sort of very high numbers in the last few months. So in theory, inflation is not going away anytime soon. And then you add the EU data as well. Absolutely horrendous. Core CPI for March, 1.3%. So that is really bad compared to 0.8% last month. Slightly above, they were expecting it to be 1.2%. So that is really terrible. 5.7% on the yearly, so it is particularly bad this month. We'll see sort of whether that's just a one-off or if that increases or decreases. That was about it for the news this week that sort of mainly interested me. So, as I say, it's been a bit of a hit and miss week. We've had sort of semiconductors not doing too well, and anything sort of physical, the miners sort of not doing particularly well. REITs have been doing pretty well. A lot of them are sort of reasonably well up, although they've been getting hit the last few weeks. Digital Realty Trust has sort of been in a bit of a low. That did get down to the sort of 90, I think a little bit lower than 90. But yeah, the industrials are sort of doing okay. Obviously, my shorts are still sort of completely in the gutter, kind of just leaving them where they are. Kind of wondering about the short Nasdaq. I mean, it is £2,000 position. Thinking maybe there's better places for that, potentially more Fortuna or Clean Spark. But I kind of think if we get a bit of a sort of downturn in the Nasdaq, in a sort of a recession, bit of a panic before sort of money printing starts, then that could sort of recover a little bit. Still 29% down on that. So yeah, I'll just kind of leaving it there for now. And the Clean Spark position's doing pretty well. That was sort of up at I think Clean Spark got to $5 briefly, and that was sort of up at 88% profit. So it's been better, but still very, very happy with that. Looking to add, certainly, if we sort of come down a little bit further. Bitcoin's dropped after the stock closed, so hopefully on Monday that should come down a little bit further, and I might top up, but we'll see. And the Chinese tech is slightly down for the week, but no real sort of surprises there. Not really looking to top up that just yet. One thing I am sort of considering, I did sort of mention, was maybe trading out a process for putting the money actually in Interactive Brokers and just buying 10 cent on the Hong Kong. So, and I'd have all three Hong Kong holdings rather than sort of continuing to hold process and hope that they can sort of reduce this gap that they have between their valuation and the market cap they have of 10 cent. Because if they're just carrying on selling more and more 10 cent, then it's becoming a bet on food delivery and classified ads, businesses and that sort of thing. The only sort of hope that you would have is that maybe some of their venture capital type investments, can pay off and not necessarily get another Tesla, another 10 cent, but, even sort of something on a smaller scale would be nice. But yeah, I'm really sort of just in it for the 10 cent, so I am considering potentially swapping that out, as it's sort of not really at a huge gain, so there wouldn't be much of a tax implication. So we'll see. I'll have a think about that. But yeah, other than that, leave your thoughts in the comments below and like and subscribe. And join the free Discord, of course. See you soon.